Should we start with COVID? I feel like shit. I don't feel like it's top of mind disclaimer, you know?
We're terrible today.
So 3 out of 4 of us have COVID. 2 of you are confirmed. I'm not confirmed. But I'm
hey, guess which ones?
Sure.
People on YouTube, guess which ones?
It looks like shit.
Yeah. But we're gonna get on the other side of this pretty quick. I'm actually, honestly, like relieved.
I just realized Eric's in bed.
No way.
Under the
No,
covers.
you're not. No, you're not.
Yeah.
Wait.
Oh, he's got
No,
the
you're
blurred
not.
background. Yeah,
Dude,
that's
I
the bed
haven't-
frame behind him.
I haven't left this
God.
bedroom in 5 days.
Wait, could you
You can
just
sit up, bros.
Man.
give us like a moment of unblur just for my own?
You want me to unblur?
Yeah, just to get like a proper perspective of this. Oh my god.
Oh man, I can't laugh. I'm gonna die.
Oh my god. All right, here I got
All
the
right,
shot.
confirmed. Which two are positive?
I've heard
Yeah.
more and more people are saying like, well, there won't be a crypto bear market ever again, like a broad crypto bear market. And it's like bullshit. Like, of course there will be. You know, like asset prices go down all the time, and of course, like all risk assets are going to move down together at some point.
Okay, but
could
do you
have some
think
kind of
the assets are going to go
exogenous-
down 90? Is ETH going to go down 95% and be dead for 2 years? Because that's what people say. I think when they say there's
That's
not
what they
gonna be a
mean by bear market. They mean down 92%. Like,
yeah, yes. Welcome to
That's-
crypto. Well, welcome to crypto, sir. our bear markets are. Our
that was
bear markets,
2018,
the
right?
assets are they're you poke them with a stick to make sure they're.
I
Everybody
have one
thought ETH was
question.
dead. Like nobody knows what that was like to be like, yeah, this is just it's dead. It's dead, right? Like right now, people who are new, it's like, oh, price goes down, it'll go back up. Price goes down, it'll go back up. But like when you held ETH from like $1,400 to like $40 or whatever the hell the bottom was, like people were like,
that's
yeah, this
so
is
brutal.
never coming
What's like the
back.
most
And
likely
years of
coin?
that.
What would be the most likely coin to go down by actually 90% and make it out on the other side alive
And make it out.
Down and make it out.
today?
I think
like today.
everything you see today, like Bitcoin, Ethereum.
No, but like
Luna,
L1s are not going to go down by 90%.
Solana has
ever
good
again.
Luna,
developer growth.
Why?
Solana, probably
Why-
great.
why would
all
they
great
not-
Candidates.
Why would they not go
They are
down
not
by
going
90%?
to go down by 90%. There's too many people who would be interested in buying. You know, this.
I think
this
the
has
biggest
reached
problem, the biggest problem with something like a Solana and well, basically everything that's not an L1 ETH, and this is something that a lot of smart people are trying to figure out right now is that like these if you look at these ecosystems, if you look at these coins in terms of like economic models where the very in vogue thing to say today is that these chains are selling block space, right? And the block space costs money, and that money is effectively like returned to like the holders of the coin, right? Because there's an economic value for that block space. And you would want people to be paying more for block space than your token is like issuing yearly in terms of inflation. Otherwise, if you think about it in a simplistic fashion, your company is effectively paying like more for marketing and subsidies than it's like taking in revenue. And a lot of people say like, hey, that's not a sustainable thing. This can't be the case, right? And I think we've seen this a lot in past bull markets where a thing happens and it doesn't seem to make sense. But then people go, but the market thinks this is true. And then somebody comes along with like a bunch of different models to justify, oh, well, this is actually why this thing is this valuable. And the market is actually smart, even though it didn't fit our preconceived notions. But then something happens and, and everything goes down 98% anyway. And then people go, oh, I guess that was just a bubble. Like I guess that initial model was correct. But sometimes that's not true. Like sometimes there just is a new like paradigm and this thing creates it and we don't have the way to model it yet, right? So I think that's possibly the case with these like layer ones, right? If you look at Solana, if you look at Matic, if you look at Avalanche, like they effectively run at like high 90s, 99, 98, 97, I don't know what the numbers are, like loss, right? If you look at the fees generated on a daily basis of like Solana versus like Ethereum, it's like it's like a complete joke. Like Ethereum is the only like layer one by like a million trillion miles that has like demand for its block space and fees that like outpaces its issuance, and it outpaces it so much that it's actually burning, you know, deflationary, you know, at
It's
certain
not an
points.
apples
It's
to
not
apples
even like
comparison,
inflationary.
Yeah.
right?
Back
Because
to
like
that.
some of these are new, so you need to kind of provide rewards and some kind of subsidy to kick off the
Why isn't
network.
it why isn't it apples to apples? Aren't they
Well,
both
just
the same?
how
Is it
long
like
they've been
Solana
operating.
and
Yeah, just Solana and
well,
Ethereum. I don't think you can compare. I mean, and I guess I don't know that sustainability is the right question to ask right now. It is long term. You're right. These things have to be able to make enough fees in order to sustain the network. You can't just have Solana subsidizing the network constantly. It won't last. But I think in the early days, it makes sense to kind of bootstrap and make it affordable for people to use.
It's like the
But I
tech
don't know
startup
if this.
approach, right?
but you're
It's
you're
like
you're talking about a
Uber.
different thing, right? Like I don't disagree at all that this like if it's one thing we've learned this year, it's that like token incentives matter and that you can do like amazing things with economic incentives, right? So I'm not at all against the idea that you print money out of thin air basically and airdrop it to people in order to jumpstart your ecosystem. I think that's a fantastic model. But I think that's a different question from there's two questions. One is what Avalanche is doing like okay, and I think the answer is like yeah, it's totally okay. It's even like a good idea, like because there's ecosystems we can look at that haven't done this, and they're like ghost chains, they're ghost towns, right? But whether or not they should do that versus like is their price like economically justified is like a totally different question. And I'm like wondering aloud, like, is the market cap of Avalanche economically justified? Is the market cap of Solana economically justified given like the sort of like input and outputs? So is it that it's unjustified or it is and our just way of like modeling these things is wrong? It's not so simple as like taking like fee revenue and assigning some like PE multiple to it. Like it's
Right.
a company. It's like there's different models like what's her name on Twitter?
Tasha.
Tasha. Yeah,
Tasha
so
called it
she's
like a country, right?
yeah, she like it's an interesting thought model, right? I think the idea that you look at these things in terms of as countries, like they're like these ecosystems with GDPs, and you wouldn't like measure the economic value of the United States in terms of like a PE ratio. In fact, it would like cause some bizarre things to happen if you did that, right? So I, I don't like really have a horse in this fight, and I own all of these other layer ones, and you know we can talk about why I do that later. But it is something I am concerned with and like looking at. Like, is the way we think about these and model these things just wrong right now? Is the
Well,
market wrong? You know, where where are we? And it is scary when you have something like Luna and AVAX and Phantom and Solana. Like these things are up like 1000x in
Yeah.
basically a year, and you have to take a step back and sanity check yourself at a certain point and think like, okay, does this make sense?
one question I have, and it's a little step back, makes it a little broader, but I did notice something about all of the losses that we had this year, in
Ooh.
particular, all of the DeFi blue chips, right? Those are not layer ones, they're layer twos, they're applications. And I guess my question is, have we kind of confirmed the fat protocol thesis? And are we assuming that going forward, applications are not the best place to put your money and that it is on the protocol level? Because it would seem that, if you look at some of the greatest, you know, DeFi applications of the year, like Uniswap, Aave, Sushi, what else? I mean, they all have real income, real fees that they're making. They're kind of, if they were centralized companies, they would be, amazing growth stories, but they all bled, against ETH.
No, in dollars. They bled in dollars.
They also bled against ETH too, no?
Well, yeah, of course. I mean, anything's going to
Bleeding
bleed
But they
against
definitely
dollars.
bled.
far more
The fact that they bled
tragic.
against dollars
Yeah.
even worse. Like,
Yeah, you're right. But like,
so you're kind of like jumping to you beat me to my 2022 prediction, because we just
Did
talked
it.
about what can go down by 90% and still come back, and my prediction was going to be these like Gen Zero DeFi protocols, like Sushi is down 80% from its highs this year, and Sushi fully diluted value of $2 billion is ridiculously cheap. So I like that now.
what
Why-
do we know
why do
what
you
their
think that's
annual
cheap?
fees are?
I think it's cheap because they actually generate revenue, and anything that generates revenue can be valued based on that revenue stream. I don't care. Like, I'm not saying that this has to validate or invalidate the FAT protocol thesis. I'm saying that anything that generates cash flow as an asset, I know how to value that.
I guess my problem with I've run into this a lot in kind of analyzing a lot of these protocols, and it's because you get a lot of biased information, obviously, because most of the high engagement stuff you come across on Twitter is somebody like shilling their bags, and then all the other people who have those bags, kind of boosting that tweet, so you get kind of showered in this like bubble of like un- unjustified optimism sometime. And I noticed a lot of people like throwing around like the earnings thing without context, right? Because I think a good example of this and the complexity of it is abracadabra spell, magic internet money, probably like one of the greatest like DeFi success stories of the year, maybe the biggest DeFi success story. Definitely shows that DeFi is not dead, and the problem isn't, I think, as you said, Nick, that there's like a value accrual to the layer one versus the apps, because I don't think that's really what happened with DeFi. But with abracadabra, like you have a lot of people throwing around these old metrics, like look at the earnings multiple, look at how much fees this thing generates, and like if you look at that, it looks like unbelievably impressive. You're like, oh my god, like the market cap versus the fees is like, it looks like a underpriced value stock, not like a high growth like tech startup. But the problem when you look under the hood is it's just like, okay, well how are those fees generated? Well, they're generated from people wanting to use MIM, magic internet money, and there is like a lot of utility in using it, right? Like there's for sure tons of utility there. The problem you run into is that if I use abracadabra, this is going to sound like such Chinese to somebody who has no idea what we're talking about, but if I use the abracadabra protocol, right, to get magic internet money, if I don't have any liquidity,
I'm totally going to clip. We have to clip this. Keep going.
So, and sometimes it takes me like talking about this out loud to realize
Oh my god,
how weird my life is. But if I get my magic internet money and I don't have any liquidity to swap it for anything else, then it doesn't like have any utility to me. I can't use it. So what abracadabra does, what it does very well, is it incentivizes deep liquidity for I'm going to call it MIM. For MIM. But liquidity doesn't just magically happen. You have to incentivize it. And the way you incentivize it is by like issuing your token spell as a reward. So if you start to look at the earnings that abracadabra has minus the emissions, like suddenly the picture doesn't look as good. It starts looking like a company that has like massive earnings, but they didn't tell you that they spent like 5 times those earnings on marketing to acquire that, right? Now, I'm not saying what abracadabra is doing is bad and that it's actually worthless, because I don't think it is. It's just like a much more complicated equation, because you could argue that they are deficit spending and investing in massive user growth and adoption, which is clearly
That just sounds like
happening. And I think,
Uber or tech startup to me. Any unicorn tech startup.
yeah, but this is like the problem with a lot of these DeFi protocols, that we just talk about, oh, look at that PE ratio, or look at that PS ratio, right? And there's no thought about, okay, like what are the emissions, what are they spending to get that? But then the other problem you have, and this is especially true with something like sushi, is like how sticky are like the users on both ends. And the problem with DEXs in general and sushi is that like the users don't care. Like, I don't care where I swap. I just want to know that they're not going to steal my money and I get a good execution price.
When the incentives
and
dry
like,
up, how are they going to
and like when you provide liquidity, you've done this, you take your capital and you just go somewhere else.
And
like, it's not like the
Web3
like,
aspect of it changes everything. Like connecting my wallet is a one-click process versus like the multi-step process of a Web2, like, is completely different. Like that makes me as a user more likely to jump at any given moment. I think that that's something that isn't discussed as well either, enough at least.
I think like how do any of these protocols reach some sort of escape velocity where they maintain a user base without incenting them with token issuance? I don't know.
Yeah,
it's like the whole thing.
Massive utility. What's that?
What you meant by, because Steve or Eric mentioned that, sushi has revenue, and that, based upon the revenue, the market cap seems like a good value stock. Were you saying that you have to take into account how much incentivization they're doing to earn that revenue, and that's why it's not?
Yes, because with something like Sushi Swap, the revenue, the bulk of it now is still, and I haven't looked into sushi in probably 2 months at this point, so excuse me if I'm like off on these numbers, but like the overwhelming majority of Sushi Swap revenue, I believe, still comes from swaps. Swaps come from liquidity, and liquidity comes from one of two places. It's like a bit of his chicken and egg problem, because like Uniswap doesn't really incentivize liquidity. There's just like a natural incentive for capital to go there, because the volume is so high that you generate like huge fees, and it's like the safest place to park huge sums of capital if you are like kind of institutional, you want to like take part in fees, right? It's a lot, institutions would rather park in Uniswap than like Sushi Swap.
Right.
And that was especially true a year ago. It's less true today. But like until you sort of cross that Rubicon and become Uniswap, like you have to like offer incentives to get capital there. And offering incentives typically means like issuing your own token as a reward and diluting the existing shareholders. So you're sort of paying for those earnings in a degree. And it's like this really complicated balancing act. You want to incentivize usage and liquidity, but like diluting shareholder value is obviously not ideal in a vacuum. I do think Sushi has potential to do something unique and interesting in the space that could make it like a really great project, right? Like, for example, I think that one of the biggest problems in DeFi today is the lack of like a massively used, like fully decentralized NFT marketplace. It's kind of crazy. So if Sushi could capture that, right? Now you're talking about something that has like actual sticky network effects, right? Yeah. When you are selling NFTs, like NFTs are not these fungible things. It's in their name, right? You need to sell your NFT where all the other NFTs are right now, or else like good luck getting like execution price on your thing. So if they could kind of do some sort of vampire attack, suck all the liquidity from OpenSea, and then suddenly like that's where people are trading NFTs, it's gonna be really hard for another protocol to come and just like copy paste that, right? But like DEXs as they are today are just like one of the easiest things for somebody to just copy paste, just totally duplicate your thing, and then like launch a new token, have different incentives, and then it's like a tough business to be in. That's like this sort of perpetual race to the bottom. It's like the big reason
Uniswap remains supreme right now. They are definitely the market leader, and
as an application, but like not as a value accrual token. It hasn't been like a great investment for the last.
Well, you made me think about that like NFT DEX essentially, and I think the way that NFTs grow and advance moving forward is like way beyond art. as we see it today. It's not like a profile pic anymore. It can be used to be like a ticket to the game you go see, or like the concert you go see. There's so many use cases for these NFTs beyond art. And I think a decentralized exchange on chain, something like Shoyu or whatever Sushi's is called, probably makes the most sense. It'll be like quick, permissionless, cheap. Like you're not going to take a 2.5% rip on it like the way OpenSea does. I could see that being the case, actually, probably way further down the road.
It's interesting that NFTs are kind of an app that kind of accrues value, not kind of, I guess, could invalidate the fat protocol thesis. There's definitely value in these NFTs as applications. I don't know if all the value accrues to the protocol there. Like you can actually see them grow and see these projects grow and make money from them. I wanted to chat about the ETH L1, L2 topic and maybe frame it up and see if we can kind of get into it a little bit.
Please, sir.
Yeah. So we talked a little bit on the thread, but I think it seems like most of the conversation has talked about decentralization and how important it is going forward. And is that what's going to determine the value and what developers are going to use and what users are going to use? And I think there's one camp that says decentralization is the reason we're here, right? Like when you're more centralized, you're prone to attacks and fraud and collusion and mistrust, right? So, if we don't have decentralization, you can basically run your applications on a Mongo database, right? And like on some kind of centralized database. And that will have security and we'll get speed and scalability versus via the L2s. But I think there's this also other perspective that's saying, listen, decentralization is better, but it's not necessary. Users may not value it as much. We'll still have transparency, even though we're not as decentralized. And what really matters to users is speed and cost of transactions. And developers will look at that and say, what I want is what users want. I want my application to grow and, gain users, get at scale. And if users are going to be on these alternate L1s, then I want my application there. And so I think there's these two kind of competing thoughts saying, well, decentralization is the whole reason we're here. And someone saying, well, speed and cost is where people want to go. So I don't know. I'm curious to see what your guys' initial thoughts are. I mean, I have some thoughts on like where I think it'll head, but I'm just curious if you guys.
Can I add another layer to the same conversation that I think like some of us might want to hit? Is obviously what's been in the news repeatedly lately has been Jack Dorsey's sort of stance on this. And obviously he's just in and of itself being a big name like an Elon Musk. Any tweet or take they have on this stuff is obviously big news. And, Jack stepping down from Twitter and having some like really bullish Bitcoin maxi type statements about the importance of decentralization. So that's like, I think like we could say it's like a character in the story that represents one of those sides, which you framed up like gorgeously, by the way. I think the whole thing is absolutely fascinating. And I think that ultimately what we're witnessing is like real time, real life politics in the cryptoverse. I have no idea how the fuck that's going to play out because we're dealing with more than just like the rationality of what's best. I think we're dealing with like human emotion and how can we persuade those users? Ultimately, those users are a vote. And so there has to be a level of persuading that occurs. And that persuading can occur through marketing. It can also occur through incentivization, like financial incentives. It's very easy, like to Steven's earlier points as well, to like pull people in. If I get airdropped money, by the way, you have to pay taxes when you get airdropped. If I get airdropped, a coin from, gas or SOS or whatever the hell it might be tomorrow, yes, that brings me in. That gets me in the game. If there's a stickiness there, if there's utility there, and that can occur with any of these, right? That's kind of like what happened with sushi. So there's so many examples of this, and I have no idea how that's going to play out. I feel like time will tell, and it's really a game of politics, and it might end up being like an infinite game. Like I sometimes go so deep in this where I think about like literally like a Star Wars sort of like take on this. I think that forever there's always going to be this like good and evil take on everything, and evil thinks that they're good anyway too, and they believe that they're doing the right thing for the right purpose. And by the way, I'm not painting one as good or evil, but I think that duality is innate in everything. And so actually what is going to cause the evolution of the space as a whole is that war, whether it's a Cold War or hot war, continuing forever, because anything else would be utopia. So what are people asking for? Are they asking for utopia? Because utopia means nothing. It means nothing's going to happen anymore. And so I think that there's a good built in to all of it. And as we move into this new world, I think it might be an infinite game that plays out forever. I think at times it'll swing in one direction or the other, and it'll go through cycles. But personally, in this moment where we are today as a society, I really value decentralization. And I hope that that camp sort of is able to continue not just leading, but sort of pulling these users in and winning votes, because I think it's important and I think it's worth fighting for. And I can understand why somebody would become a maxi, while at the same time, I think it's ridiculous, like we talked about in a previous episode. Like, I think watching the whole space evolve is important, but ultimately at the end, tribes are natural.
And real quick before Eric and Steven, kind of get their inputs, I put a list of, decentralization on a spectrum. So I looked at the number of validators for these major L1s. So ETH is almost for ETH2. ETH is almost at 300,000 validators, which is kind of mind blowing. Binance, 21 validators. I think we should say these numbers because I think they give people an idea of like the order of magnitudes of difference. Solana is somewhere like between 1,000 and 2,000. Terra has 130. AVAX also 1 to 2,000. Polygon 100. So you're talking about, with Binance on one end with tens of validators, Terra and Polygon with hundreds, AVAX and Solana with thousands, and then you have ETH with hundreds of thousands. And I think the question will be like, how much decentralization is enough?
Are those validators?
That's a
are those different nodes? Are those different nodes? Because are those different nodes? Because I think, like, if I validate for ETH with like less than 32 ETH, if I do it with like 5 ETH, I'm a validator, but I'm not adding anything to decentralization when I go through Lido or Rocket Pool or whatever.
Good point.
So my question was,
you're a piece of it ultimately, right? You may not be a whole sort of like an entire validator, but
I think it matters like how many nodes there are, not just how many validators there are.
Good point. Yeah.
Okay, so but like to jump back into what you said, Nick, I think that's like really interesting because there's some stark differences on that list. But do you know which one of those networks has the most users?
I didn't have enough time to look up the active user addresses.
Binance, right?
It's Binance.
Yeah.
so
it's not even
Binance with its 20 validators versus Ethereum's 300,000. And do fact check me on this, but I believe that Binance chain has like many more users than Ethereum does.
You know what? I saw that too, Steven, and it made me so bullish because I was thinking that ETH probably has about 300K users in total, based on when you see these like SOS airdrop, gas airdrop. There's not that many users on the ETH chain, and I'm thinking like, well, fuck, if Binance has 4.5 million users, they're probably going to come over to ETH when it gets cheap. Like, that's bullish. Like 4.5 million, that's a huge scale.
Why would they leave?
Well, I mean, maybe
they obviously don't care about decentralization, right? The fact that I don't know, maybe Binance gets attacked and there's an issue with the network. They don't care about that.
Okay, well, let's just leave that. I want to go back to your original. I want to go back to your original question. I think what that even shows is kind of what I was going to say, is that with decentralization, it kind of just reminds me of of TradFi, like my line of personal finance. Like everyone has their own sort of tolerance. They're, for where they value decentralization. I don't think there's a right answer. It's going to be a right answer for each person. And I think all these chains now coming up and seeing success is a testament to that. Like each one of these things kind of talks to a different person's personal level of decentralization. And I think on a Wednesday, I had talked about sort of this topic, but like not in decentralization, but in security. Like what's the right amount of security? It's like it depends on what you're trying to secure. Like if I'm walking down the street
Right.
with my wallet, do I need a tank behind me? But if I'm walking down the street carrying like $1 million in a briefcase, I probably want more than just my girlfriend next to me.
More
like
firepower.
I probably want a machine gun or something. So like, security, I think decentralization follows that same path. It's like, it depends on your own personal needs.
Yeah, I mean, so what do you think is like the biggest thing bugging you, Nick? Like what's the most like pressing question on your brain, do you think, on this
It's
topic?
how do I allocate my money for this
I
next year?
think I
Because
think that's a
yeah,
great question.
that's really all
Great
we care about. I
actionable
mean,
question.
yeah.
Yeah.
It should
That's
literally be
good because
this whole
that
podcast what we're talking about. Like
yeah,
it
let's
should
just
be.
get a little bit out of the weeds a little bit.
Yeah.
Yeah. I I think that you need to have a bucket in your portfolio that is like crypto ecosystems. If it's one thing the last year taught us, it's that this concept of the permissionless ecosystem, we'll call it, is like a very real thing, and there's like tons of market demand for it, and we're only like scratching the surface, right? So you should view that like you people sometimes think too broadly about crypto. They're just like, I want to buy crypto, but that's it's silly. It's just being like, I want to buy stocks, and you buy like a gold mining company and Apple, and there are obviously sectors that don't move together. You don't want too much in one area and not enough in another, right? But like to me, like the two biggest things in crypto right now are A, like Bitcoin, and then B, these like ecosystem plays. And there's tons of smaller stuff that we can talk about that falls under I mean, probably not that small, metaverse and gaming. Those are going to be big things, right? But when I think of like a stable portfolio that's not going to lose like 100% of its value in the next like 8 years, like those are the two things. And Bitcoin is easy. You buy Bitcoin and there's no competition. But this other space is like tricky because you have ETH in it, obviously, and ETH lives there. And it's sort of like almost like crossing over into the Bitcoin realm a little bit, so it almost wants to play in both pools. But it's far from a given to me that like ETH is going to be like the obvious winner, especially in the next 12 months. Um, and I think you would be like really foolish to not like allocate to other like competitors in the space. Now, it's obviously like a tricky question. Do you buy two of them? Do you buy three of them? Do you buy five of them? Like how many
Right.
do you buy? I think that the space in general is rough, right? Because everything is up like 1,000x, but also I see tons of potential, right? So don't overinvest in the space because it could go down 80% this year for sure. That's like totally in the cards. It could also do 10x. Anything is possible. But I think I have probably like 50% of that allocation in ETH, and then the other is in like an ETH hedge because I'm like, oh, it's either ETH's going to take, you know, 80% of the market share and we'll call it a day, or one of this like 50% is going to kind of rise up and start eating away tons of that market share. So that's broadly how I look at it. In reality, it's more complicated because we're going to start getting these like layer 2 tokens, which are
Right.
technically Ethereum, but they're not
So
like
how do you
owning
guys look at
base
those?
Ethereum.
Like how do you guys weigh those and allocate those and value those in comparison to.
Well, the simplest way to do this, right, is to just identify the ones, just like 3 or 4 of them that you think are like good and rock solid, right? And when I look at this, like I feel like very confident about Solana because like I think it's doing something that's unique, right? It's got its own code base. It's not like an EVM, Ethereum machine copy. One of the problems with some of these chains, right? They use the Ethereum virtual machine. Is it yes, it's trickier to build for in the first place, but what happens is when you build with the Ethereum virtual machine, it's very easy for projects to just port over somewhere else and port over somewhere else, right? So what you see is there's a lot of stuff in the Solana ecosystem that only exists in the Solana ecosystem. They are building out their own little sticky kind of unique ecosystem, which I think is important if you want to build something that's going to have the legs to go a long way. And obviously they're trying to be like the fastest and they do all this like, hocus pocus, which you may or may not think is like legitimate or decentralized or however, but like it doesn't matter for the end user. The transaction go fast and it costs cheap, right? And that's it. And people like that.
Cosmos is not a EVM either, is it?
Cosmos. So Cosmos is a tricky play because I view Cosmos as almost more of like there's this other category that I've been thinking about in terms of, okay, like if you view that we're going into this like multi-blockchain world where all these ecosystems are going to exist, we're going to have like a need for connective tissue. There's going to be a need for like bridging protocols like Synapse, which allow you to send money back and forth between them. And that's sort of like what Cosmos is. It's sort of designed to be this like interlinking system where all these things can kind of play together nicely. And like people who I see talk about it, who I talk to, who I respect, like they do speak very highly of Cosmos as like a tech thing. The problem is that Cosmos does not have the Cardano like YouTube shill army, right? Like if you go on Twitter and you tweet something mean about Atom, nothing happens, right? Yeah. But if you just go on Twitter and you just write like Cardano sucks, like 9,000 guys come out of the woodwork and start calling you a moron.
Isn't Luna built on Cosmos? Like Luna's huge these days, and I don't think it's getting much play that it's built on Cosmos.
I mean, is it built on Cosmos?
I'm pretty sure.
I mean, I'd have to look into that. I know that they my brain doesn't work. They interact, with that ecosystem in a particular way. I know the UST is going over there. But yeah, I think we're getting a little sidetracked here, but yeah, we're so I think Cosmos is like Adam. I think it's a fine play for that. I was just talking about why it hasn't done well. But yeah, I like Solana. I like Avalanche. I like Luna. I really like Phantom. Phantom has been my value play for a while. Like if you generally think that EVM based blockchains that have good communities and like a unique character to their ecosystem and unique apps are just going to accrue some of the value that comes into the space, then I think Phantom is a good play, because if you just look at it in terms of its valuation versus like the amount of money locked in there, the wallets, all these metrics, like it is one of the only ones remaining that doesn't look super, inflated. Like I do feel a little weird recommending something like.
Can we take it back high level a little bit? Can we take it back a little more high level? Like, do you, Steven, do you look at alt L1s and L2s as the same thing? So like you said L2s and you mentioned Solana, like that's not an L2, right? It's an L1. So like, are you kind of lumping them together?
The same thing as an investor?
Yeah, as like an investment bucket.
Yes, because and no, and it's really blurry.
I think you kind of have to
like,
differentiate them.
Classify like a matic,
because like, But I think like that's what we're talking about here is like, so not many L2s even exist as an investment right now.
Right.
So when we're talking about 2022, I think what we're talking about when we say L2 investment, it's like these things that are going to launch probably in 2022, like Arbitrum,
Arbitrum
Optimism.
or Optimism.
And I think what we're asking, the question is like, how would you view buying Arbitrum token, which we have no idea what it's going to launch at or anything, or Optimism token versus owning Sol? And that's like probably a more interesting conversation. I think it's easier to.
How would you?
I mean,
play that,
I'll get raked over the coals for saying this probably, but I'm probably like more bullish on like Solana or Avalanche for the next year than like if Arbitrum just dropped a token tomorrow. Because even though in theory we should all want everybody to use like Arbitrum, like the reality is like it's still 100 times more expensive to use Arbitrum than Solana, maybe more. Solana is so cheap, and it's just not a good user experience to use Arbitrum, because if you want to get money on and off, it's complicated, especially getting money off. There's no exchange on off ramps, and especially if you're like a big power user, like you want to move like $50 million of ETH there in one go and take it off.
There's no way.
You gotta wait 7 days, you know. It's like,
no one's gonna make a market for that much amount of money, right, you know, when it's really gonna be like one-sided. You know, no one's gonna provide
this
money.
Is one of the like the long list of kind of sub problems that I think ETH has to overcome in order to sort of achieve its like longer term narrative. And I am skeptical that in the next, say, 12 months, because I am very much thinking about things over the next like year right now, I am a little skeptical that it's going to just overcome all of these obstacles and like just blow all these other ecosystems out of the water, and then like all the ETH people go home like rich and happy. You know, I'm not super sold on that, and that is a position I've had that is definitely changed over the course of the year, you know, quite a bit. So
I think I agree with you, but if we use like the Tasha framework, which basically says that the token value is going to be driven by the amount of money that's like transacted on the chain, kind of like a GDP type metric. Mm-hmm. I mean, there's a lot of money on ETH that would be really excited to bridge over to cheaper fees. So I think that Arbitrum and Optimism, well, maybe not, because the bridge already exists and there's not that much use on them. Mm-hmm. So maybe I'm contradicting myself. I'm just maybe putting forth a framework to view the question. Even it's just like where is there gonna be more?
Let's take
activity?
your assumption.
Yeah, exactly.
Let's assume the money goes. You know,
if the money does go, I think that the L2 token also flies, and I think that there's an appetite for these L2 tokens already. So it's almost like kind of in the meta game analogy, it's kind of like ready to win. It would have to probably fail to lose, I think. At least in the short term. I think these things can pump quick. I'm not suggesting that I would choose to own it over ETH.
It's interesting because so this is a good narrative, right? Everyone is assuming that layer twos, they're here. I don't know if they're being used as much as people thought they were going to be used, mainly because the on and off ramps. But I think people think if the tokens are there, they're going to do well. But people could be disappointed very easily. If the assumption is that they're going to do very well, and that because those tokens exist, maybe there are some incentives, more money goes over. I think there could be more downside that it doesn't come to fruition, and there could be a lot of risk there in assuming that once these tokens are there and the ability to invest, that the money does accrue to the layer 2 token. It may not.
That's a pretty good take, I think, because when you actually zoom out of it, people already know that the token's coming, so the incentive is pretty much there already. So
it's tough to be priced in though, because there's not that many. There's like Matic, which is like a side chain. There's IMX, which is like a layer 2 for NFT marketplaces and minting. There really isn't anything else to kind of play this horse right now.
Right. And man, there's not much to do on them. There's not much interesting activity to even
There's
do.
there's another take that people always say is like, well, the layer two is going to have to settle on layer one, so the value will accrue to the layer one, will accrue to ETH. But
Mm-hmm.
we're talking about orders of magnitude of transactions, maybe like 1,000 times the transactions being able bundled up
Yeah.
into one transaction into ETH. And while there will be a ton of block space demand, it's like, well, which one, wins out? The ability for these layer twos to package up, a ton of transactions into one transaction, um, or just, or does just a sheer amount of block space demand, you know, outpace it? Maybe the block space demand 10,000 X's, and there's some kind of like a, you know, abstraction where layer twos are able to bundle up 1,000 transactions into one. Which one wins?
So this is all assuming like everything we're talking about is like a hindsight kind of question. So let's just assume you wake up tomorrow and we're all airdropped like some optimism, right? What are you going to do? You're going to buy in? How much are you going to allocate? L2s are now in motion. How do you guys play that?
It's a good question. I just thought of something important. Like, I like to use derivative securities in traditional finance, and I can't use them on ETH L1, but I could and do use them today on ETH L2, and it's so early that they're like the products themselves don't really, they're not very good.
Can you explain that?
Like, so like options trading on ETH L1 is like way too expensive. You can't do it. It's cost prohibitive. But on an L2 with cheaper trading fees, you can do like a full decentralized order book and just run that at all times. People like, there could be a huge market that doesn't exist on L1, which would be a pretty compelling use case, and specifically for like big money, because big money probably doesn't want to be on Solana with like 10 validators.
Well, what about the point that Steven brings up, where let's say you're going to roll over 1,000 ETH to run your option strategy? Are you okay having a tough time bringing it back? Or are you going to say, I'm going to settle here. This is where I'm going to camp out for a long time, and I'll use some hopefully fiat on off ramp that will be developed in the future, and just kind of like settle in, say, optimism in layer two.
Right. Yeah. I guess that's a huge question that needs to be solved. But yeah, I mean.
So I'm curious, like, just to zoom out a bit on some of these like predictions and things that are going to play out next year. Do you guys have any like more general, big picture, macro, economic, social, socioeconomic in general, like takes, anything like that? How we think 2022 as a year is going to look? I think people have been pissed off for a very long time. So I'm just generally curious if like the cynicism and nihilism will reduce that people like just generally have across the board. I hope
it's going to get worse.
But okay, go.
I think it's going to get worse.
Dig into that. What's going to happen?
So I was thinking about this the other day, and like, fuck, it might be just like too far askew to your question, but like the cynicism and the bickering and the bullshit we see, I think is actually a manifestation of a different problem. I think the problem is like it's largely this wealth inequality that we see. That's mostly driven by like Fed printing and like these policies that we've taken, and the fact that poor people can't work their way out because they're earning wages in dollars that are becoming less and less valuable, and the assets that they want to acquire to get wealthy are getting more and more expensive, and they can't buy them. So there's no path out of the wealth inequality. So they're getting backed into a corner of poverty, and they're like just desperately looking for solutions.
These are like pitchforks, almost like these ideologies have become pitchforks.
So instead they're looking at each other, and they're looking at the scarcity that is right in front of them with no other option, and they're like fighting for whatever's available. So that manifests itself in terms of like hating your neighbor and like racism and all the shit that we're seeing. So I don't think that problem is going to be solved in 2022.
Yeah, I had a similar prediction. I think we all kind of agree inflation will continue, but I think the trend that I think will exacerbate and show up more in culture and in news is this kind of wealth gap because of inflation, for the same reasons that Eric mentioned. Like I don't think we talk about it as much now, that it's actually creating a pretty drastic wealth gap.
Right.
That
It's
you know
almost
if
like
you
it's the problem, and it's not part of the narrative. Like it, I
I
think
haven't
At
heard a
all.
politician mention it. Um, I don't see it being talked about in the news, but people are certainly feeling it. You feel it if your wages went up, 6, 7%, which is I think what the number is, maybe like 5 to 7% for low wages, but your real inflation is maybe closer to 20%. So they're certainly feeling it, and I think it's just going to continue to widen. And if you're lucky enough to own assets, you probably feel like you're doing pretty well this year. If you own a house, you're wealthier this year on paper. If you were in stocks or really anything, freaking baseball cards, you know, your net worth went up. But if you live month to month, it's a lot harder to keep up paycheck to paycheck. And so that's not really being talked about. And for some reason, the narrative puts the cause of that on people who are creating wealth, like asset holders and Elon
Yeah, the
Musk and Jeff
billionaires,
Bezos,
they're the problem.
instead of monetary and fiscal policy. So yeah, it's troublesome and frustrating to hear, but and
the bigger problem is I don't see a way out. Like I keep thinking about like how do you get your way out of it? The way out is
revolt.
growth. Well, you have to.
Well,
Well, yeah, I
literally,
think you,
there has not been one solution like properly communicated and laid out and a plan to
so. The
follow
only
through with
the
it.
only way to fix
Not
the
a single
money
one.
is you cut costs, which we've already shown we can't do it. You can't cut the federal budget, just because everyone fucking disagrees. Right now, we're spending a dollar. The government's spending a dollar for every 50 cents they take in, and like when
Right.
they try to cut, they take their cost down to 99 cents for every 50 cents they take in. It's not. It doesn't work. So then the only other way is to increase their revenues, which is increase taxes. So they're going to squeeze tighter and tighter and tighter, and eventually people like Musk and Bezos are going to be like, screw this, I'm leaving. And that's like, I think I saw a stat that 61% of Americans paid zero federal taxes. So like you're going to squeeze Bezos more because like you can't get rock out of a stone. These people don't pay taxes anyway. 61% don't pay taxes anyway. So you squeeze Bezos more and he's just going to fuck off. Like the world's getting more and more global, not less. Like,
It seems, yeah, I find it
so
pretty alarming that we have a problem of helping lower and middle class achieve some kind of upward economic mobility. So the problem is, how do we help those groups grow wealth, create wealth? But all we talk about is the transfer of wealth. You can either grow wealth or you can transfer it, and 98% of the discussion is around, well, how do we transfer that wealth, to those people, instead of trying to you know focus on how we can help those people create their own wealth. And I
Precisely.
think there's this like underlying assumption that if all else were, if all were right in the world, that everyone would have equal amounts of wealth in the world. And I don't think that's what is real. That you kind of hit some. That's not really how the world works, and that we need to enact some grand political, some kind of regulation in order to fix that. And so that's why we don't focus on, the creation of wealth. People talk about the transfer of wealth.
Yeah, there's a bigger problem too.
Yeah.
Well, like utopia is a wonderful thing, but that's why it's like this fairy tale and it's something in cinema and in books and it doesn't exist in reality, and every attempt to create it has always failed, and people create these like beautiful, wonderful like works like the Communist Manifesto that attempt to like enable that, and it just spills into nothing but blood. and it works completely the opposite of how they intended it, which was equality. But I think to your point, Nick, like the reason for that is that human beings want results instantly. One is a top down approach where the people in power get to make decisions about who should have what and then transfer to create results that they think will create a good, quick, short term hit and give the people what they want, which is ultimately what they're trying to get is a vote. The other path is a bottom up approach that requires getting in at the grassroots level with people and literally fundamentally changing their thinking. The good news for us is I think that human beings in general are getting their information from different places. And I think that they're waking up to a lot of these realities and realizing that they can get their information from a Rogan or a podcast like this and completely alter that sort of state of mind of like taking personal responsibility is not a bad thing, even though it's been told to me that it is sort of like this broken way of creating equality. And ultimately it is the best thing and it is the best path and it takes time, but it's a long game.
Yeah. I mean, I just like hate this term wealth inequality. I think it's like the dumbest term. And it's sort of like a nefarious term in a way, because like when you hear like wealth inequality, like you think that the problem is that people have disparate like amounts of wealth, and that's like the root of the problem. But that's not the root of the problem. The wealth inequality is like a symptom of the problem. It's not the cause of the problem, right? Because we can imagine a world where your neighbors are all like 100 times richer than you, but you can buy a nice house and you can send your kids to school and you have healthcare and you can buy like you wouldn't care. You wouldn't like care that everybody's way richer than you. Maybe you would if you're a petty person, but if like all your basic needs are met and like you can live a great life, that distribution should be irrelevant to everybody. So when you hear wealth inequality, you think, oh, the problem is that the wealth is being distributed improperly. And that's sort of like intuitively like leads you to the solution that, oh, well, if we just take the income and redistribute it properly, that will solve the problem, because you think the root of the problem is that the income is not distributed correctly. But it's all wrong. Like as Nick like talked about, like the root of the problem is like the money, right? The root of the problem is this way we run asset markets and the currency in like this complicated, mixture of things that leads to this, they call it the Cantillon effect, where whoever's closest to the money printer kind of gets like all of the benefit, right? And the people who are closest to the money printer in the US are the banks, and the people who buy all of these assets like that are kind of driven by, bonds and QE and stuff like that, real estate, stocks. And so if you buy those things, your wealth goes up, you get a ton of, you get richer in assets, right? And if you don't, like there's like a gap increasing. And meanwhile, these types of policies, right, they're also driving up the costs of like basic goods for people. Not even just basic goods, but like education and healthcare. Like everything is more expensive. But if you aren't participating in the asset bubble, then you are now just totally like screwed, right? But the problem, like I said, isn't just taking money from rich people and somehow redistributing it to like poor people. It's not like going to fix the problem. The problem, I mean, I'm not even going to say there's one problem. There's like multitudes of problems, right? Like one obvious solution would be, for example, figuring out a way to get lower income people to just actively or passively participate in the stock market from like the day they're born, so that people have some built-in tie to like the generalized like appreciation of like the GDP and the economic value of the United States, because they don't have any connection from the day they're born all the way until the day they die. Sometimes they may never buy real estate. They may never buy a stock, and they're just perpetually getting left farther and farther behind. And pretty soon that does reach some sort of like breaking point where you ultimately can only solve the problem via either like revolution, or you need like the equivalent of like the reinvention of the internet, or something that just spurs such insane growth and prosperity that you can kind of like grow your way out of the problem, as Eric said. But like ultimately, if the whole system is constructed You know, like Elon has talked about this. Like the system is constructed so that the people who are allocating the resources that are available in the market are just a bunch of like centralized bureaucrats, right? Ultimately, if that is the structure of the system and you don't fix that system, then even like infinite abundance will soon still be squandered and you will like be left here in this exact same place over
Critical
and over
point.
again. So it's really important to identify what the
Mm.
structural roots of the problem are. Otherwise, you can't fix them and you just end up with people
So
talking a
then
bunch of
how do you
nonsense back
teach
and forth to
people
each
how
other.
to think that way from a first principles perspective is really a fundamental question as
Yeah.
well.
Well, what Armand, what Stephen was saying is like, what if you did, instead of maybe take all this money on that was used on war and poverty programs, but what Stephen was saying is like, how could you get people in an early age investing in assets? What if instead of subsidizing people towards the end of their life, you did it in the beginning? And
I love this take.
instead of like social, well, I don't really know what the take is, I'm just kind of talking out loud, but we obviously give like social security at the end of your life. Obviously we don't want older generations kind of not living a civil and you know uh integrity full life. But
Yeah,
what
let
if
them
you
fend
gave
for
it to them?
themselves. They can just go work for them.
What?
Let them get out in the market. But what if you did give them a account when they're born tied to their social security number that is, I don't know, like an 18-year lock period with like a further 10-year vesting schedule, and the only thing you can use it for is investing in assets.
Maybe
I don't know
Miami
if
will
that
do
like
this first, and then it
Miami
will.
coin.
Yeah, maybe they'll start giving it to kids when they're born, and you'll have a
I could
little
totally see that happening.
little piggy bank of BTC waiting for you, worth
Like
like
the
few million
government
bucks.
the government subsidizes 401k plans, right? They obviously
Yeah.
give tax breaks, and there's only certain types of investments that you can invest in 401k plans. And there could be like a early start program, not educator related but finance related, where you know some of that money that was allocated for war on poverty would go to like a early years program, and it's like a 401k account where it's invested in equities or other asset classes. And I don't think it has this inflation effect that we do have with direct transfers, because direct transfers are this very high velocity type of money injection into the system, right? It's like cash in your bank account immediately gets spent, and the velocity just takes off from there. If it's this account that is locked up for a long period of time, and maybe you can take it out over time with less and less tax um, you know hits, maybe it's less velocity, doesn't really create it, maybe doesn't jack up asset prices, but teaches people from an early on, when they're 6 years old, to see that there's a number in a bank account that they'll be able to use later on in life. And then when they're 12, they see that, whoa, that tripled. And then when they're 18, you see that that tripled again. And maybe through that effect, you could teach them,
Look, the
some
root
value of assets versus trading your time for money.
the root at what everyone's hitting at underneath it all is education. It's an education problem. It always has been, it
Mm-hmm.
always will be. And so the reason I'm bullish on all of this working out is because we are far more educated than we ever have been. And even though it feels like the person next to you and the average intelligence of a human being is like literally like barely getting by, because it's true, like an average intelligent person is like dumb actually. Like I think people don't realize this enough. Like they don't wake up to the fact that the people around them, like honestly, when you really look at the bell curve and you realize that like a person who and these days, by the way, this idea of like a college education is completely obsolete. So this is a bad way of sort of showing the example, because these days people that don't go to college are smarter than the ones that do. But back in the day, it's like, average intelligence that went to college is like, slightly above average intelligence, right? And if you look at average intelligence, this is a person who's barely getting by in life. They're in and out of jail maybe, or they're barely able to get a job and hold a job. They're struggling. And then imagine that 50% of the people are below that line. So, of course, we have an education problem. We have a problem where we need people to learn how to take responsibility, to learn finances, to learn, it's like all the memes always say and all the Instagram motivational, quotes by all the influencers always say. It's like the problem is ultimately that all the things that we were taught in school are mostly useless. And the things that we should have been taught, we had to learn on our own. What the internet will do and is doing, and content in general does, is it gives access to this information to everybody worldwide. So as people come online and they adopt cryptocurrency and jump into this space, they have to get educated. And it changes everything about the way they think. They learn how to think from a first principles perspective. And I think we see an exponential change in average intelligence over time that it's difficult to see right now. I sound like an insane optimist, but I have to be sometimes. Like, it's my only way, like, to survive.
I guess for people who are still live paycheck to paycheck, they could learn all they want about, gaining financial freedom. But if they're not able to save, and not able to invest in assets,
if you can't buy assets,
why can't they buy assets? Why not?
Because if your dollar that you make is getting worth less and less by inflation, and asset prices are going higher and higher, so you can't buy them.
Sure, but everybody
if
starts
you're barely
somewhere.
Getting by,
you start somewhere. It's like building blocks. You buy that baseball card, you flip it into something else, then you buy some crypto, then you buy a stock, you buy fractional shares, you buy a little bit. Like, I started with nothing. I think everybody starts somewhere.
I just need the path. I need the path to exist. Like, people just need the path to exist, and then the system's going to be okay.
Yes, and by the way, one more point on this is like education, right? Okay, so I can now learn skills that I never had access to before through YouTube. All of a sudden, instead of earning $15 an hour, I can earn 30. There you go. Jump on Upwork.com, make some fucking money, and use the extra $15 an hour to go invest in some crypto. All right, I'm done.
Yeah, to your point, like to your point, there's so much you can learn on YouTube or whatever. Like, you can literally learn anything these days. If you can't learn something, I think it's your own problem at this point. It's like the fault is within you, because like you can literally learn anything.
Yes.
With the internet.
I mean, I do think of that. Part of me thinks about, people who have kids. I mean, none of us have kids. So we don't understand what that's like, to have to raise kids, maybe sometimes at an early age, and, not be able to have the time or money to, do these things. But that being said, this is the age of opportunity. Not only can you learn every skill online, but, as of last year, you don't even have to be in an office or go anywhere to make that money. I mean, it's so hard to find people who actually want to work in an office anymore. We have trouble, hiring people.
Isn't that what the Great Resignation is? Like, all these people are realizing that, like, and then realizing that they can obtain new skills and make more money and have more flexibility than ever before.
Work 2 jobs at the same time from home, remote.
Yeah. It's game changing.
Yeah, it's great. I mean, I think we forget sometimes that like opportunity it's a double-edged sword, because for every one of us who's able to seize these like new means of like educating ourselves and making money, we, by seizing those opportunities, leapfrog the people who don't by like massive margins, right? It's not like 70 years ago, like how far ahead could you really get, like if you were just born into a particular situation, right? So now like it's crazy like what you can do, but that also means that like people are really getting left behind who don't jump on that train. And I think another thing that we were talking about like is worth coming back to. I mean, Nick touched on this a little bit, and we're like, well, think about people who have kids, blah, blah, blah. I saw a thing once where somebody analyzed Warren Buffett's net worth, and they talked about how a huge chunk of his net worth is attributable to the fact that he started investing at such a young age. So
he's been in the market for like
85
years. Yeah.
Yeah. So a huge part of like wealth accumulation, and it's easy to see in the Buffett sense, right? The extra like 12 years he had in the market to exponentially compound growth, like manifested in like an enormous portfolio difference. The difference between billions and like, tens of millions, and nobody would care about Warren Buffett.
Yeah, if he has 90 billion,
portion of like $80 million, like nobody.
He made like 89 of his 90 billion after age 70 or something like that.
Yeah, but this concept is the same when it comes to developing one's own like intellectual capital. We'll just not even put finance aside, right? If you start at the age of 10 or 11 and you are being educated and you have like tools, you're starting a business, you are doing something, I don't know, maybe you're building some crap in Minecraft and selling it, and you're doing whatever there's 9-year-olds are doing in the digital economy these days. By the time you hit 21, you could have like 11 years of experience, like developing all of this intellectual capital and experience. Versus there are some people who are at like age 29 and have like barely started, and oh, now they have like 3 kids. And it's just realistically going to be like almost impossible for them to get that ball rolling and have it snowball enough that they can kind of get ahead of like the burdens of life that they're now faced with, you know. So it is a tricky question
So that
because
is a
like not
great
everybody
question.
will do that.
Great question. I think the one thing other than obviously get the access to the education, build the intellectual, like build aptitude, build skills in general. Sure, all of that. But the big differentiation that we are yet to solve as a society is not this creating equal outcomes. It's where is the starting line, right? The opportunity question. I think everyone can agree that that's important and that ultimately it seems to come down to your zip code in most cases. Like the difference between being in a great zip code versus a shitty one is like I'm starting at a 7 and you're starting at a 1. Okay, great. And as you illustrated, Stephen, the person who's at a 7, if they start building and they start acquiring knowledge and capital and assets, the person in position number 1 is completely royally fucked. Like the gap becomes like 50 to 1. So the question becomes, how do we actually, this is probably a 2-hour question of itself, but how do you ultimately solve? Is that solved with the help of the government? Like, is there a
But
libertarian
I actually
response
don't think of
to
that
that?
as I don't think of it as big a problem as you outline it to be. Like to Steven's earlier point, like if you only get to $1 million home and Steven and I get to a $10 million home, does that actually matter to you? Like all that matters is that you have the path to provide a life for yourself that's improved. Like I don't think it
I
actually
think the
matters. Like
narrative says, and everybody generally believes that it matters, and there will be this like battle of ideology until we resolve the starting line problem. I think everybody wants to resolve the starting line problem. And yeah, maybe you're right. Maybe we never can. And ultimately all that matters is that people have a good life
I just
and
don't
aren't
think that
poor.
like I don't think that is the problem. I don't think that is the
Yeah.
problem.
I hope
Uh,
it isn't. But
like
today, do you disagree that today it is? Like today people believe that it is the problem.
What is the problem?
The
People are just
well, first they're forcing outcomes, but equal opportunity.
I think that what
Do
you're
yeah.
describing is another manifestation of what I was talking about earlier, where people are backed into a corner and they're lashing out in ways that they're just reaching for the answer, and
Something.
that's just one of their, I guess, like ways of like trying to understand their situation. Like I don't actually think the starting line matters as much as you do. What I liked about this whole conversation is that we did identify a real problem, which is like uh, like how the government and like the financial system is sort of like exacerbating the gap. Uh, like I don't think wealth inequality is inherently like bad. I think that's fine. But like when the gap gets too wide and people can't uh, work their way up, then that's a real problem. And I like that you guys came with some solutions, like albeit imperfect, but like that's pretty cool. Um, and I think like giving a newborn some like stock upside uh, is probably like an easier pill to swallow than just like handing out free money to people who need it. Like that's an easier pill to swallow um, for the economy and stuff.
And I mean, in terms of equal opportunity, we can definitely talk about that. I'm sure we'll go off at it in other episodes, but I think the best thing you can do to give yourself an advantage if you're behind the ball, like Steven said, is surround yourself by a certain type of person. Like we always talk about how you're the average of the 5 people you hang around the most. Like that is one thing that could level up your, knowledge in a specific area, your attitude, your motivation, uh, quicker than anything. A quick story, like I went, this was like over 10 years ago. No, just about 10 years ago. I went to Thailand to go train Muay Thai, and it was kind of like beginner status, and kind of in shape, not really though compared to professional fighters in Thailand. And I showed up, and it's a fight camp full of 20 professional fighters, and their warm-up routine was my workout normally. Like their warm-up routine was about 45 to 60 minutes of running, jumping rope for 20 minutes, shadow boxing for another 20, 30 minutes. And I was exhausted. But what I noticed is that instantly being around them, everything got better. Like from how crisp my technique was to breaking past mental barriers and how in shape you were. And so just instantly being around, people can kind of, I think, accelerate and close that gap pretty quick. You start using the language they do, you start thinking like the way they do. So anyway, just a thought, I think maybe as we kind of wrap up in terms of closing that gap.
Yeah, that's not a small one. That's a life-changing
I
one.
had a random idea.
What you
I
got?
don't know if anybody's proposed this before. This is a total non sequitur from what you just said.
I can
So
barely see you guys, by the way. Like, I think
You got a headache?
it's like I'm honestly like my not 10% left. It's like a
Right.
migraine.
This is,
Hit us, Steven,
This is
and then we can wrap.
okay. Has anybody ever proposed the idea of, imagine you had these stocks that make up the S&P 500. And imagine if like a portion of the corporate tax they may have, I guess some of them don't really pay corporate tax, but imagine they do pay corporate tax. And what if a portion of that corporate tax was instead turned into those companies like issuing additional shares and like putting that into like a national pool?
AB
So
fund.
you end up with this like, yeah, you end up with this national pool over time of like shares of stock in the S&P 500 or something that are being like kind of like issued as like little thing, and then we
And like the
distribute
tax is the
those
dilution to shareholders, essentially.
yeah, it's like a dilution instead of like a tax or something. I just
I
came
kind of
up with
like
this
it, dude.
5 seconds
where your
ago. This
head's
might
at.
be a terrible idea that falls apart on like 9 seconds of analysis. What if we did that and we just distributed though like ownership? It was like a fund, and then we distributed shares of that national S&P funds to like newborns or something. And then
DeFi
they just have
tokenomics has his
that as
brain
they
working in
grow.
like really weird ways.
It's
kind of beautiful.
Yeah, it's kind of like a roundabout way of creating like America coin. In an ideal world, right, you would also figure out how to put like real estate value, right, into that as well, where some
Yeah.
tiny
Yeah.
sliver of real estate value is like shaved off and then put into this pool. And I just like this because instead of it being a tax and then it just gets filtered into this system of like just terribleness, right? And then 10 cents come out the other end of every dollar. You're just sort of directly transferring value to actual humans. And then that value is just automatically compounding over time. Like they can't touch it till they're like 18 or 21.
Could you
or whatever
localize
you wanna make.
property taxes and then just issue sort of some local coin to sort of citizens of that?
I think that's a different
jurisdiction?
thing, which I like. It's a slightly different problem. But I am like very in favor of the idea that like someday all local, cities are going to have like just basically their own coin. Like if we can secure tokenize like basic stuff like real estate and a lot of this, like we could create like
This is
interesting
good.
value accrual
What
mechanisms, right?
what are we going to solve next on our next episode?
I got I think the America coin airdrop backed by
Wow.
a diversified portfolio of equities, real estate, somehow like tokenized and back, whether synthetic or not, with some kind of very long locking period, and then even very long unstaking or vesting period is super valuable. And then maybe to go back to our last episode, you you airdrop like the American coin and it stands for votes. We ban kind of PACs and businesses to fund elections. And instead, everyone gets a certain amount of votes or dollars dropped in their wallet, and they can choose where those dollars go, whether it goes to like a governor race or a presidential race or local city council race. And
yeah, I think we got to
that's
do
the
a
money.
whole pod
First
on this. Just
prediction.
a whole pod on political tokenization.
Yeah, first
Yeah, that'd be-
presidential election on the blockchain.
Ooh.
Ooh.
We should probably stop brainstorming out loud live. This might turn out
I
bad.
hope never, to be honest.
Really?
Yeah. I think there's like this weird, like, good element of like decentralization in the fact that you have basically like thousands of like shitty systems all taking place. Like it'd be like impossible for like an outside force to like corrupt like all of these like local, they're like on paper ballots and stuff. I know there's people who are gonna say, oh, but like, yeah, it's easy to, and yeah, maybe it is true to like, is easy to corrupt one of those little things, but like, I don't know, the idea that you could do something digitally and have like a single point of failure is a little scary. I would have to look at the details of it. I'm sure there's a way you could probably.
Armand, did we get to your 2022 prediction?
I don't know.
He's like blindness. I can't
Yeah,
see. Right
it's bad, but there is one thing. Oh man, it's a lot to unpackage. So the simple version is just I think that the first like big win for the world where we'll see the peak of this ideological battle is with COVID. And I predict that after this winter, people will say, fuck you. I've had enough. Enough people have had this. I no longer will put up with these restrictions, these ideas, these thoughts. I don't care anymore. And I think that we will have exhausted people to a point where everybody will at least 51% or more unite on that matter, and we can mostly move past it. I think everything else was mostly what you were saying, Eric, will become more volatile and more extreme in nature. And I think we'll see
hope so.
more anger.
I hope so on the COVID front.
But I think
Biden went up
I think this is
states'
it.
rights this week and just said it's on the governors now. Like this is not a federal issue.
Really?
So yeah, I think you're on track.
Well, the whole local token thing will be really interesting because I think the Balaji perspective for people that heard that, or if you guys heard that, is like the whole vote with your feet model is really cool to me. That whole idea is really cool to me. And I think if people don't like what they see, they'll move to a different town or a different state and things will work themselves out that way.
Yeah, get some free tokens.
Yeah.
Move your family for an airdrop.
I mean, it's
all right.
Probably going to happen.
Well,
should we get some rest, boys?
Yeah.
Eric is literally in bed.
Yeah, I've been taking a nap for the last hour.
Yeah.
I can't feel my back. It's just numb. I should have like taken an edible. This is bad. It's bad. Anyway, I wish you guys an amazing 2022. I'll be here and you'll be there, and I won't be seeing any of you. I wish you guys an amazing new year, and everybody watching and listening as well. May this be the best year yet.
Yeah. Happy recovery to you boys too.
Happy recovery.
Yeah.
Good luck.
Peace.
Happy New Year, guys.
Adios.
Bye.